Thanks everybody for coming. This is fabulous. I know many of you, some of you I don't know. And we'll go through the presentation. I guess the objective here is to, first off, thank you, Tara. Thank you, Mike. Shane, for inviting me and allowing me to speak to you guys. We'll make it a little informal, and there's a lot to cover when it comes to insurance. And so there will be some areas where, we might skip through them a little bit. I'll just ask a couple of questions. Is anybody here on a board of directors? Good. Okay, we'll cover that. Anybody who's providing professional services? Yeah, good. We'll cover that. Good. Excellent. Let's see what else. Anybody here in manufacturing? Okay, that's good. Because I don't want to, it's a big subject and I don't want to bore you with stuff that has absolutely no application to you, okay? So what do we know about insurance? It's confusing. What do we normally hear? The wordings are full of fine print and confusing. Or it's a ripoff and insurance companies are just out to make money. You're nodding your head. Yes, insurance contracts can be confusing, and that's why you need to understand what is in the policy wording. It's a contract between you and the insurance company, and you're paying a premium to transfer some of your business risk to somebody else. And yes, sometimes we do pay and we never get anything back. And is it any different than employment insurance? Sometimes we pay for employment insurance all our lives as employees. Sometimes we never lose our job and never require it. And that's why the concept of insurance is that the losses of the few are paid for by the premiums of the many. And as for insurance companies out to make money, you're absolutely right, they are. All of us in here are in here for the same reason. And we'll talk a little bit about, where that money goes. By the end of this, I hope that we can cover off a little bit about risk management. We're going to talk about some insurance basics. We're going to talk about how you should customize your insurance program, some of the types of insurance that are available that might be applicable to you. Of course, we're going to talk about claims because that's where the rubber hits the road. And we're going to, how do you choose your insurance provider? How do you know who you should be dealing with? And there's some other resources I'll share with you, and then we'll have a Q&A. So make sure if you have any questions, I'm happy to answer them. I love her. She's fabulous. Judge Judy. She always talks about the four corners of the contract. If it's not in there, it's not there. So make sure it's in the contract. Yes, insurance is there if we have a claim, but we really don't want to have one. Having one, yes, you could be compensated for your financial loss. However, it takes up your time, your energy, your employees' time, and has an effect on your business. So we want to first identify the exposures you have to each of your own business. Find options to reduce or eliminate those exposures. Then you're going to, once you've found various options, you're going to pick the best ones. You're going to implement those, and you're going to monitor them and improve them. Just because you've made a plan doesn't mean it stays that way, because as your business changes, so should your risk management change. It's then you develop your insurance program. So how do you manage that risk? You can avoid the risk altogether. For instance, if you're selling a product online, if your 95% of your sales are to Canada and 5% are to the U.S., maybe you want to reconsider selling to the U.S. The U.S. Population is very litigious, and as a result, if you're going to have to buy insurance for your product's liability in the U.S., it's going to cost you more, and it probably won't even make up for the profit you're going to lose if you don't sell it. That's called risk avoidance. Reduction, reduce the risk. Examples of that are specifically in the wintertime, especially nowadays, snow removal, making sure that you have shoveled your walks. Slip and falls are one of the largest types of claims that we have, especially for commercial business owners. It's gotten a little bit nuts in terms of the number of lawsuits. So maybe you want to manage that whole process. Installing sprinkler systems, alarm systems, cyber training. We're going to talk a little bit about cyber. You can retain the risk. We all do that when we take a collision deductible on our car. The higher the deductible, the lower the premium. You're retaining that risk. Or maybe you choose not to insure the collision coverage at all. That's called retaining the risk. And sharing the risk. That could be taking on a partner. It could be subcontracting out the work, or it could be sharing it with your insurance company. Benjamin Franklin said, in this world, nothing can be said to be certain except death and taxes. I kind of added a little extra there. Perhaps we should add insurance to that as well. How many of you have heard of Lloyd's of London? Okay, Lloyd's of London is not a company. Lloyd's of London started in a coffee house back in the 1600s when the captains and the sailors and the boat owners would meet in this Edward Lloyd's coffee house. And they would talk about which ships came back and which ships didn't. So the coffee house set up and rented little tables for these business owners to say, you know what, if you give me X number of dollars, if your ship doesn't come back, I'll pay you for your ship. And that's how that whole Lloyd's of London started. It's a group of what we call syndicates, and I believe last count somewhere between 75 and 85 syndicates or separate little insurance companies or incorporated in Lloyd's and managed by the Lloyd's umbrella. I deal with Lloyd's quite a bit, and the risks that they take on and how they do it is just fascinating. Again, the concept is the premiums of the many pay for the losses of the few, and you are not supposed to profit from a loss. This is not gambling, this is not a windfall. And like I said, it's kind of like employment insurance. Without insurance, we couldn't drive a car because the government says we have to have insurance. We couldn't get a mortgage because the bank's not going to loan you money unless you've insured your property, whether it's to borrow business, to buy a house, and you couldn't lease space for your business because the building owner doesn't want you in there if you don't have insurance. He doesn't want to be on the hook. So we'll talk a little bit about where the money goes. These are stats from 2015 to the end of 2021. So the money's got to go somewhere. Almost 56% of it goes to claims. 13.7 for taxes. And it'd be interesting to note that in Alberta, in every province, we have something called a premium tax. For every $100 in premium that you pay for your house, your car, your business, $4 right off the top is going to the government. They also pay income tax, property taxes. Operating margin, 21%, which when you compare operating margins to other industries is pretty darn good. And then an 8.7% profit margin. And I thought, well, I'm going to compare that. What are the banks doing these days? So I pulled off the most recent reports. And let me see. I went to, I believe it's the Royal, it was the Royal Bank. For that same time period was average of 25.9% profit, which is really good. Now I know where my interest money is going. One size fits all. How many of you fit into one size fits all clothing? Not me. No, it doesn't. We need to look at customizing our insurance. It's your insurance provider that should be asking you these questions. And if he's not, you might want to check to see who you're dealing with. What type of business do you have? Do you own property? How much would it cost to replace it? Does it stay in one place? Could you be sued? Bodily injury services that you provide as a professional or as a director on a board? Do you have a website? What do you use it for? Is it crucial to your business? What would happen if your physical location was destroyed? We've seen situations like that. I was in Fort McMurray after the fire. It was devastating how many businesses went out of business. They didn't have a business continuity plan and they hadn't properly prepared with their insurance. Are you signing contracts? Are you assuming somebody else's problems? And do you import or export any products? So you need to customize your insurance. And how do you control your money? This is a non-exhaustive list of some of the types of insurance you can purchase for your business. It's property you own. It's property that you care for of somebody else's. It's whether or not you can be sued. How about the crime cover? You know, how safe is your money from employee fraud? And I've seen lots of cases of employee fraud. We'll talk a little bit about equipment breakdown. Not much because we don't have a lot of manufacturing in here. Automobile insurance, we're all familiar with that. We'll touch on that as it relates to business versus commercial. Business interruption, probably the most misunderstood coverage we have in our industry today. And cyber and privacy. And. But we're not going to talk about and. Mike, you were talking about condos a little earlier on in our conversation. That's a whole seminar unto itself. So if anybody wants to know about condos and afraid to ask, I'll help you out. That was one of the many pictures of Fort McMurray. We took a tour through Fort McMurray. It was just devastating. I remember there's another picture I have, and it's a picture of burnt out buildings all around Fort McMurray. And in the middle is a little park bench, not touched, not burned, green grass, and a butterfly. It gives me goosebumps. When you're looking at your building and your contents, does it stay on the premises? Or is it mobile equipment? Are you responsible for anybody else's property? Are you repairing cars? Are you a dry cleaner? Are you taking in computers for repair? You have to ensure that as well. How do you want to be paid? Do you want to be paid for the replacement value? Or do you want just what the item is worth? And what the item is worth depends on how old it is, what's the use of it, can it be easily replaced? You need to make sure that you're insuring to the proper amounts. depending on what valuation you want. Warranties. If you see the word warranty in an insurance policy, be very careful. Warranties are a promise, not by the insurance company to you, but from you to the insurance company. And if you don't pay attention to that and have a claim, you might not be covered. Alarm systems. If you have an alarm system and your premium is based on making sure the alarm is set and the alarm isn't working anymore and you have a break-in, you're going to have a fight with the insurance company. Locked vehicle warranties. Mobile equipment, tools, equipment, cameras, for instance, are all things that should be in a locked vehicle compartment. And if there is no signs of visible entry when that vehicle or when that property is stolen, you won't get paid. You have to take some responsibility for trying to protect your assets. Deductibles, we talked about that a little earlier. Seasonal adjustments. Anybody who's in a business where a bulk of their sales on their stock is a certain period of time, you can get seasonal adjustments to pick that up so that you're not underinsured during that period of time. And co-insurance, there's going to do a whole separate slide on that. This is where the insurance company makes sure that you're insuring to value, that you bought the right amount of insurance, because if you didn't, they're not going to pay your whole claim. So this is how it works. Commercial building insured for $1 million. The replacement cost is $1.4 million today. The co-insurance says you have to insure to at least 90% of that replacement cost. In this case is $1.26 million. You have a $300,000 fire, so they take the amount of insurance that you purchased over what you were supposed to have with a minimum, 90%. That's 79%. Bottom line is, you're going to pay $63,000 of that $300,000 loss because you didn't buy enough insurance. That's going to apply to your building, it's going to apply to your contents, it's going to apply to your mobile contents, all of it. The idea being that we want to be on a level playing field. Why should the person who only pays X number of dollars lower to keep his premiums down be rewarded by getting full payment for his claim? And that's why that clause is in there. The other thing I wanted you to note is anybody who has a business now where you have physical assets, the consumer price index since the beginning of the year, in 6 months, on non-residential buildings has gone up 12.8%, which means if you started the year with insurance for $1 million, you need to up that to 1.28 right now. Same thing with your contents. Any contents, 11.2% on goods. You could be outside of that co-insurance penalty simply because of the cost of goods and buildings going up. So check out your policies. This is where the bombs go off. The lawsuits come in, and I see them on a regular basis. There are 4 insuring agreements in a general liability policy. It's meant to cover, in Canada, we have a legal system. It's a combination of common law, which is legislated law, and civil law, which is based on precedent. Those are the court judgments that you see. If you're negligent, you can be liable to that third party. And negligence is doing something that a reasonable and prudent man wouldn't or would do in certain circumstances. Okay? So the first insuring agreement is pretty simple, straightforward. It's somebody who's injured bodily or has property damage. Personal or advertising injury is things like stolen ideas, invasion of privacy, libel, slander, copyright infringement. Tenant's legal liability. If you damage the space you're in, you could be held liable if you're the one who starts that fire. Under the general liability policy, property in your care, custody, and control is not covered, like your customer's goods and like that space that you are renting. Tenant's legal liability protects you in the event that the building owner's insurance company, after having paid for the fire you started, is going to come after you for the building that you occupied and maybe for the rest. Contractual liability. Please, please, please read your contracts before you sign them. I have seen contracts where the client sent me a copy of the contract. She's importing a product from the States. In the contract it says, we have no liability for this product. You are going to assume the responsibility for the manufacture of our product. I said, don't sign that. You can't buy that from them. And it was a very hazardous situation. Had she assumed that liability? The insurance company wasn't. She wouldn't even be able to get insurance. So read your contracts. And if you're hiring subcontractors to share that risk, they're not covered under your insurance. Only employees are covered under your insurance, not subcontractors. They need their own insurance. Make sure they have it, and you can ask them for something called a certificate of insurance. Professional liability. This excludes bodily injury and property damage, and it's meant for financial loss, for things like mental anguish, humiliation, emotional distress, or a wrongful act. You've heard of medical malpractice. They're giving advice, and if they take that advice and there's a financial loss as a result of that, you could be held responsible for that. And this is a different type of policy in that if you have a car accident today, it's covered under your policy this year, okay? But if you did some consulting a year and a half ago, but you didn't know that there was a potential for a claim, and all of a sudden you get a lawsuit today, it's covered in the policy from the claim when it was made, not when it happened. There's a condition in the policy that if you know of something in your professional career on renewal and you don't tell the insurance company there might be a claim later, you might not be covered for that. So you got to watch that under professional liability. Directors and officers, that speaks to your duties as managing that board. It protects your personal assets. Anybody can sue. Employees, vendors, competitors, and investments. And again, I'll give you an example to show you what I mean. I went onto a board one time, and first thing, of course, I asked for is, do we have directors and officers? They checked. No, we don't. I said, well, I can't serve on your board. Sorry. So they got some what we call D&O cover. That next year, our funding was cut. Huge chunk of funding was cut. We could no longer afford to have as many people on staff as we did. So as a board, we made a decision that we were going to unfortunately have to lay one person off. Well, that one person was not happy with that and threatened to sue for wrongful dismissal. That was the board that made that decision. Luckily, we had directors and officers insurance. So if you're serving on a board, ask to see the directors and officers. And if there's no directors and officers insurance, either get it or get off. Okay, home-based business. Just because you have insurance on your home doesn't mean your business is covered. As a matter of fact, it's not. Because your home insurance is going to exclude commercial or business activities. It can be something as simple as client comes to visit you. You never usually have clients come to your door, but you know, it's winter and guess what? You just didn't get out to put that salt down. They have fallen and cracked their head. So you go to your home insurance company and they say, what was he doing there? Oh, it's a client? No, sorry. Business activity, not covered. Some home insurance companies that have a home-based business extension, and you can just extend your policy. You can self-insure, not a good idea. Or you can purchase separate coverage. I'm finding, even before COVID, businesses moving to their home. As is normal, the insurance industry is slow to catch up. If you're operating a home-based business as a sole proprietor and you don't have a limited company, you're leaving yourself open. Crime cover. There are certain types of property that are excluded. Cash, money, securities, employee fraud, those kinds of things are not covered. That's called crime insurance. Crime like vandalism or theft of the property, that's covered. Money and securities, that's usually something that you want to insure separately. So money, securities, employee theft, fraudulent funds transfer, and forgery. And everybody thinks my employees won't steal from me, but I know personally in my business a number of situations where nonprofit, $200,000, a small brokerage firm, trusted employee, been there for 20 years, over $120,000. That was trust money, that was client money. So you have to be careful. And it's not just having the insurance, it's making sure you have the safeguards in place. Pressure vessels, welding equipment, anything with moving parts, printing equipment, that's normally where you want to deal with some equipment breakdown coverage. But I won't go into a lot of detail here because it's not really applicable to most. Are you in manufacturing by any chance?
I am.
You are, okay. So that's an area that you need to make sure if you have equipment with moving parts, if you have any pressure vessels over 15 pounds a square inch, that you have separate coverage for equipment breakdown. An example of an equipment breakdown coverage might involve a printing press, a bolt that comes off and goes through the roller. It's going to destroy the drum. Automobile insurance. We can always be sure that that invoice is going to come. Personal auto is not designed to cover the additional exposures from a commercial business. My car is business use. I get in my vehicle, I drive to a client's, I drive home. That's business use, or picking up a client and going for lunch, that kind of thing. Commercial is when you're using your vehicle to haul anything necessary for the running of the business. Contractors, delivery trucks, even Uber is a commercial use. It's a different department in the insurance company, and there's different legislative applications to the personal as opposed to business. Anybody who has employees, for instance, that might use their own vehicles, but if they don't have insurance, or maybe they don't have enough insurance, and there's a large bodily injury lawsuit, you could be held liable. What the business interruption coverage does is it gives you loss of income while the business operations are temporarily interrupted due to an insured loss. There has to be damage to the premises. It's kind of like a follow thing. If this happens, then you get business interruption. Okay? And there's various options. You can get compensation until the building is repaired in a time frame that would be appropriate. So for example, if you are a tenant in a building, you don't own the building, and all of a sudden the landlord's taking his sweet time, or there's been a strike, or they have a fight with the contractor. It was supposed to take 6 months to get covered, to be back up in business, but it takes 12. You're only going to get business interruption for 6 months. The better form of cover would be until your sales return to where they were before the loss. You can get extra expense coverage, so you can speed up delivery of perhaps some specialized equipment that you have to order, have it air shipped instead of rail shipped. You can also get coverage to pay your employees either for 90 or 180 days, so that at least they have some protection. And you need to make sure that you have enough coverage to cover you for 24 months past the date of the time you got the insurance. If you have a claim on the last day of your policy, you're looking at what your revenue would have been a year down the road, okay? And that's 100% co-insurance. There's no leeway there. You buy the right amount of insurance, or you're going to pay part of your loss. And you have to prove your loss, so your records better be up to date. Cybercrime. Anybody here been affected by a cyber attack yet? Oh, your turn's coming. Hackers, ransomware, malware, phishing, distributed denial of service, breaches, privacy breaches. These are just some of the words. I mean, you can see the definition of each of those on the slide. My husband comes to me constantly, honey, I got this email. Do I open it? Did you check where the address was? Do you know who that person is? No. It's just not worth it. A privacy breach is releasing or allowing to be released or having stolen personal information as defined under the Privacy Act. And we have laws in our province that says if you have a breach of your data, you must notify the Privacy Commissioner. And then the Privacy Commissioner is going to make you do all kinds of wonderful things that's going to cost you all kinds of money, like getting credit reporting for all of the clients that are affected. Alberta privacy laws makes the reporting of breaches mandatory. You can purchase insurance to provide coverage for credit monitoring and ID theft protection. Now, a large majority of cybercrimes are actually caused by human error. So what can we do about it? Well, the first thing you want to do is secure your systems. I would suggest an IT audit or a cyber audit by a reputable firm. I often hear that, oh, my data is cloud-based, I don't have to worry. 45% of the cybercrimes in a recent survey done by IBM were cloud-based. And you'll find that the third-party tech providers, if you read your contract, it has a limited liability. So you can't just depend on you need to know what you've got in terms of the contracts you've signed. The second thing you want to do is educate, educate, educate. Your people need to understand what they can click, what they can't click. I had a situation where a client left someone in charge of taking the backup drive home, left the backup drive in the car was stolen. Luckily, there was immediate police intervention. They got the vehicle and the disc back. That disc contained so much private information. Without insurance, it would have gone down. And so educate your people. The next thing, of course, is the insurance part. So cyber insurance will be designed to cover your own losses, the costs for the privacy breaches, the cyber extortion or ransom, any customer attrition or data damage. It'll also cover the third-party losses, technology errors and omissions, payment card industry data security standard losses. If you take credit cards, You are required by the PCID to have certain standards and controls. If you don't, they can fine you anywhere from $5,000 to $100,000 a day. This is where the rubber hits the road. This is why I'm in business. My business is to keep your business going. And that's what the insurance industry is designed to do. In every policy, there's legislated wording called statutory conditions, and it outlines your responsibilities, the insurance company's responsibilities, and there's some time limits in there. For instance, once you filed that final proof of loss, they have 60 days to pay you, or say, well, no, I'm not going to pay you. But they've got to do something. And if they don't do anything, they're in default. Requirements after a loss. The first thing you want to do is report it to your insurance company. Now, when I say report to your insurer, this is where I kind of, off the record, will talk to a client and say, you have coverage for that. You have a $1,000 deductible. The claim is $1,500. If you put that claim in, now you have a claim on your policy. If you have another claim and another one, it's going to be almost impossible to find you insurance without a $5,000 or a $10,000 deductible. As an example, I had a little water damage claim in my house. I went down, the sump pump had failed. I looked, I'm crap, I'm not putting in a claim. I started, taking the laminate flooring up and everything, because I wasn't putting in a claim for less than $2,000 to $3,000. It's not worth it. So as a broker, I will advise my clients. Now, if it's any potential for liability at all, you've got to get your insurance company involved. So report it to your insurer. Your job is to protect it from further loss. Meaning if you've got a large windstorm, I had a client who had a windstorm claim on his commercial building this year, the tiles were coming off. He couldn't get anybody out. We couldn't get anybody out from the insurance company right away because everybody was busy. So I said, you need to get somebody up there to at least tarp it down. That's your responsibility. Protect it from further damage, because the further damage caused as a result of you not doing something won't be covered. You need to cooperate with your insurance company. You need to prove your loss. It's not up to the insurance company to go through your records and write down how much they're going to pay you. That's up to you to prove your loss to the insurance company. And then they will provide you, the insurance company will provide you with a form called a proof of loss, which you need to complete. Finally, there's 2 distribution methods. It's not uncommon for most people to head to the internet and just see what they can buy online, which is great. I think that's super. We need that technology. But even as a broker, and I use portals, I also check my wordings and check the wordings of the insurance company. Recently, I had a client who utilize the portal that I provided him to get a quote. He said in his application that he did 35% of his sales in the US. When I reviewed the wording to make sure that it was going to be appropriate for him, turned out that there was a Canadian territory limitation in the policy. So he said yes on the application, and they gave him a policy that didn't cover 35% of his business. It was really cheap. He's not buying that product. And I've taken it up with the insurance company as well. So there's 2 distribution methods. One is what we call a direct writer. That's where they have one insurance company has sales agents. They sell you their one product. AMA, Co-op, Desjardins, those are direct writers. So as a consumer, you go to AMA and then you go to Desjardins and then you do all of that legwork. I'm the other guy. I'm the broker. I represent multiple insurance companies and we'll do all that legwork for you, as well as the risk management that goes with it. So what do you want to look for? Look for an education. Getting a license in this business, it's not that easy, but that's not the end of it. You need to have a lot more education to do what I'm doing. Experience and expertise. They need to understand your business operation. I don't know how many times I've had people say, well, look, I'll just give you my policy. Can you give me a quote? No, I can't. Can't help you. Yes?
When you're dealing with a call center,
yep.
Can you assume that they're educated?
Ask. What's your degree? Where did you go to school? What education do you have? How long have you been in the business? Many of them, I see it all the time, they're 6 months on the line. And they're really not going to understand your business operation, depending on how complex the business operation is. Very good question. Reputation, referrals, and Google rating. And they should offer you a complete review of the operation. Don't just take the policy, copy it, and give you a price. They're not doing you any favors. recommendations as to the type of coverage, give you choices, give you options. So you can decide, do you really need to insure that? No, I think I'll self-insure that. I'll assume that risk. I don't want to pay that premium. And help you reduce your risk. Are there things that you can do to reduce your risk? Other resources, obviously your broker. The next is the insurance company's complaint process. Every insurance company has a legislated requirement to have a complaint process. And they must allow you to go through that process if you're not happy with the denial of a claim, the amount of a claim, go through that process. There's also something called the Insurance Bureau of Canada, which is the trade association for the insurance companies in Canada. They have a consumer department staffed by actually in many cases, ex-presidents of insurance companies or ex-senior executives who really know the business and will give you some information. Then there's the General Insurance Ombuds Service. Back it up a bit. In the statutory conditions of a policy or in the policy wording, it refers to a dispute resolution process that is, again, a government requirement. If you are in dispute with your insurance company, you can take it to an arbitration process. If your claim doesn't fall within that arbitration process, the General Insurance Ombuds Service can help you with that. It's a voluntary, non-binding arbitration process, but they also have extremely qualified people to answer the questions that you might have and direct you to where you need to go and give you some next steps. Okay, that's a good question. The question was, if you are dealing with a non-American company, can you contact the IBC or the GIO? You certainly can contact them. They'll try to help you as much as possible. But depending on the situation, well, see, and this is the other thing. I mean, if you're dealing with an American insurance company, in order for an insurance company to be operating in this province, they have to be licensed through the Department of Finance, Superintendent of Insurance Office. So if you're dealing with an insurance company who's not listed, and that's if you Google licensed insurance companies in Alberta, it'll take you right to the site. If they're not on that list, then you report to the Superintendent of Insurance, who is the regulator. Now, you can buy insurance from non-licensed people, but it's a nightmare for, number one, it's not secure because there's no oversight from the Department of Finance, and there's also a requirement that there's certain premium taxes and reporting that have to be done. That's a really good question. So the question is, if you are selling products on consignment, who's responsible for those products? Back to the question with respect to legal, if you are legally liable for the damage to the product, you are responsible. And that's why you'd need to have customers' goods or goods on consignment insured, okay? There's something called Bailey's customers' goods. And as a bailee, your level of required responsibility is higher. So it's not just ordinary negligence. You don't have to be grossly negligent to be responsible in a bailee situation. It could be something as simple as, oh, I just ran for coffee and forgot to lock the door. Well, yeah, you're responsible. That was not very smart. Okay, the question is, he has a delivery company coming to pick things up from his place quite often. If the delivery company has an accident because there's ice on his road, is he liable? That's going to be up to the courts to decide. It's going to depend on what the Traffic Act says. It's going to depend on a number of situations. Could you be sued? Yes, anybody can sue you. And the problem with insurance is it's not so much always, am I liable? It's, I just got sued. Who's paying for the lawyer? Insurance policies are going to cover those defense costs, and that's really important. So under the Highway Traffic Safety Act, it does say that the driver is supposed to drive based on the road conditions. Now, if he's not on a vehicle and he's walking on your icy sidewalk, now you are responsible. 3 to 4 years ago, insurance companies that were writing snow removal contractors started to go, wait a minute, lawsuits, lawsuits, lawsuits. And I've seen so many of them. People, I don't understand why we can't learn to walk on ice and snow. We grew up here. But they do fall and they do crack their heads, and then they sue whoever owns the property. So they would sue the property owner and they'd sue the snow removal contractor. So the snow removal contractors were getting killed with liability claims. So the insurance companies were going, we can't afford this. We got to increase our rates. So they did. It took many small snow removal contractors out of business. Premiums were in the 6 figures. So if you weren't doing $20 million worth of snow removal, you couldn't get insurance. It's starting to come down a little bit. Now minimum premiums for a smaller contractor are around the $10,000 mark. Again, that's a lot of money. You got to shovel a lot of snow to make $10,000 profit from shoveling that snow. That's a good question. She wants to know if she can have different policies for different types of insurance that she's purchasing. The answer is yes. However, it's going to depend on what kind of business you're in. It's going to depend on how hazard it is and how many markets there are. Many times, if you have a small business, it's best to keep it all together if you can, because it's going to save you money. So I'm happy to speak to you after, specifically about your situation, and give you some guidance. I'm happy to do that, no problem at all. And I'll give you the information that you can take to your provider. But yeah, usually it's best to keep it together. The other thing too is if you have a claim where you've got a business and there's been a fire and you've got your business insurance and your auto insurance and your tools insurance and it's all in the same place, you don't want to be dealing with 3 separate insurance companies for a claim. It's just a nightmare. It really is. So it's advisable to try and keep it together, but it's not always the best route to go depending on the situation. Okay? Anything else? Great. Thanks, guys. Appreciate it.
Thank you.